Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, August 21st, 2023. I am Frank Ochoa, aka PivotBoss. Happy Monday, everyone. Here's a look at the daily time frame of the ES this week, showing a little bit of strength here in overnight and pre-market trading. A nice little push higher right at the London Open there. Friday, we had a morning low. That was a fairly decent strong low right at the RTH Open. Wasn't like a strong low that was going to suggest a major turnaround, but it was at least a low that was strong enough to suggest that the low was in for the week. Big time trend week down, and once you have a week that's stretched its legs in this manner, there can be a little bit of a pullback that happens to begin the week here. That pullback could then become perhaps a range-bound week here as the market digests the recent sell-off. It's kind of like what happened here before, when you had initially the initial drop down, then price bounces back on this day, which is kind of like this, and it ends up creating a range. It goes up and finds the top end of the range, and then we saw more weakness. So do we get a range-bound week this week following last week's excitement here to the downside? Perhaps so. One of the things that would be the most bearish would be for price to rally and then see a major rejection here. A rejection of prices back up into this zone, 44.50, could be very bearish. That opens up a continuation down. Again, breaking down in the manner that we did here would suggest a return back toward lower market structure. The 4,200 level could be next. That's a big time level right here. That was the breakout point to get us to 46. 46, we've seen a turnaround here. 44 is the midpoint of that zone. So again, if we start to find lower highs here fairly soon, those could be a selling opportunity for bears looking to return price back to 4,200 and value for the year. All right, let's take a look here at the NQ. Similar price action, not quite as bullish here for the NQ as the ES, but we did get a decent strong low on a Friday here. Decent enough, not as strong as say the YM or RTY that day, but it was enough to suggest a little bit of strength to the upside toward 14.8. We barely got 14.8 by the end of the day, and now you see a little bit higher here. Check mark trend day up so far, but an up day in a very bearish trend. And as you've seen, some of the lone up days here in this up move, you've seen them get rejected the very next day with a failed new high and a continuation down for the most part. So is that what's going to happen here on Tuesday? Do we drift higher on a Monday and see a turnaround Tuesday that brings us back down? And again, that could develop some range here after weakness. So that type of behavior could be indicative of further weakness up ahead. Like the ES, this one rallied here into about 16K. 15K is about right here, and the next level down 14. So on this next push, again, if there's a rejection on the pullback, that could be an opportunity for bears to defend and drop this thing back to 14K. You also have 13.5 as VWAP and the midpoint of last year's range. So that could be a big time magnet for price down the road, 13.5 here. So again, how is price going to respond in this downtrend? The next bounce could be sold. Perhaps we go range bound first and then see a continuation down. So as we head closer and closer to the Labor Day holiday here, we got 2 more Mondays. So 2 weeks from today is a market holiday right here, and that's the 4th of September. We could go into that point a little quietly and then start to see a pickup of volatility after that. So let's take a look here now at crude oil. If you look at crude right now, up 1%, very strong bounce here to begin the week. We had a strong high that came in over here, nice rejection here, thrust reversal off the 85s. Price breaks down and drops into 79 and the FOMC key level here from July 26th. When that level was developed, you saw a move up, then you saw a move back to it, and then up, and then back to it, and now up again. Now on this leg here, are we going to find rejection? Is price going to be able to find acceptance above this zone, or do we start to break back down? If we start to break back down here, say we start to break back below 81s, that could be indicative of another failed new high that's developing in a down move, and that could be indicative of weakness ahead. Remember, the upper end of this range here, this large 20-point range is 84 here. You have 74 as the midpoint and 64 as the bottom. This range has been in play for nearly a year now, and it has had quite a bit of trouble trying to get through the top end of that zone. So this rotation here to the downside could be indicative of more weakness to come, and if so, this bounce could be the opportunity to sell it for a continuation down. Remember, we have value here at about 75. We got 74 as the middle of the range. Those could be easy targets. 72 is the bottom end as well of this next move. So we could be looking at about a 10-handle decline up ahead if we're dropping from 82s back to 72s. But right now, keep an eye on this part of the range here. If we start to break back below 81s, it could be an indication of weakness to come, at least from a near-term perspective, but also a broader perspective up ahead. Let's take a look here at gold futures. You'll see gold right here showing a little bit of bounce off the lows. Failed new low here through the previous session's midpoint. The previous session was a super narrow inside day, so today could be a narrow outside day range if we take out the high, at least briefly. We are in a very bearish downtrend here and approaching 1900 as the next key level below. Again, giving up 1960, then 1950, and 1940. Those were a lot of key levels there. And now to break back below those zones would suggest at least a return back to this pivot low for a test. That's 1900. That's also just below the 200-day moving average, the previous month's low. So to get into this zone could provide another modest bounce opportunity back up the range. So keep an eye on 1900 here up ahead. Lastly, taking a look at the YM. You'll notice the YM here had a bit of a low on Friday. That was a decent low. It was a decent low to begin the day. Price rallies, and you see a return back toward 34.5, 34.6, 34.7 now up into this zone. So downtrending market, failed new high here was huge. You had that rounded top type of pattern and the breakdown from that range. That was a super narrow 3-week trading range that has 1,500 to 2,000 points of potential range in it. So to break down here recently, that would suggest that we could have more downside up ahead that could take us easily back toward 33.8 easily, and maybe even beyond given the amount of juice here. Now if we for some reason get a super strong low down here, maybe we can turn it back up. But based off of the break here of market structure breaking back below 34.8, that's the key level to watch on the 800s. Remember, we talked about this. 35.8, 34.8, 33.8 would be about here. Rather, it's here. And then you have down here 32.8. These are the key levels here. So to break back below 34.8 would mean any retest from below could be sold for a continuation into 33.8 down below. That's also where yearly VWAP is, the 200-day moving average, previous month's low. All these key levels all come into a point at 33,800. Is that the next downside target up ahead? So given the downtrend, any strength could be seen as an opportunity here to look for an opportunity to defend and push this thing down into the next level below. All right, that is it for now. We'll see how this plays out here heading into the new week of trading. Good luck, trade well, and I'll see you in the trading room. Take care.